This is the Alhambra Investments Weekly Market Pulse with Alhambra CEO Joe Calhoun. And Joe, we had a tough week last week. I mean, S&P was down, bonds were down, commodities down, REITs down. You even said in your written article, it'd be better to mention the things that were actually up last week. But all of this generated a whole lot of panic last week. But humans have really short memories, and we forget that this thing happened even a little bit more severe back in June.
Yeah, I don't know if it was really panicky last week. It's kind of interesting, right? I mean, you usually expect to see the volatility index, the VIX, go higher. But we got that sell-off on Tuesday, 1,200 points down on the Dow, and VIX never went over 30. I mean, it's just normally we like to see the VIX at a bottom up around 40, but we got those numbers back earlier in the summer, like you said. We did get VIX levels up above 30 way back, quite a while ago. So maybe that's going to be the high for this cycle. I don't know. But it didn't seem panicky. I mean, it was just kind of steady all day long and really kind of all week. It's just a really kind of a pall that kind of fell over the market. I mean, just people just apparently just are tired, I guess is a good way to put it, which is not surprising. We've been in this bear market for a while now. But yeah, look, from a sentiment standpoint, we are getting back to where we were in June at those lows in June. We're not quite there yet. We may go a little bit lower. We've got a Fed meeting this week on Wednesday. Who knows what Powell's going to say. I don't think anybody expected him to say anything that's going to be encouraging to the bull argument. But it is what it is. Sentiment gets very negative in bear markets. That's the way it's always been. That's the way it will be this time too. When we're at the lows, people will have just given up. And I think last week was that's getting on that road to giving up. You could just see it. You could just feel it. People are just throwing the towel in.
Well, this bear market's different than anything in recent memory. And I know you've been doing some research looking at bear markets that go way, way back into the 60s and 70s. What did you find? What are you finding when you look at that?
Well, first of all, I think it's good to explain why I'm doing that. Look, I think all the bear markets in that post 1980 period were all in a disinflationary environment where inflation was falling. So I don't know that it really makes any sense to look at any of those bear markets and say, well, this one's going to be similar to say 2008 or 2000 or some of the really mild ones like 1990 wasn't much of a bear market. Or a recession. So I don't know that those really are good comparisons because it was a disinflationary environment. And that's not where we are. We're in a rising inflation environment. And you have to go back to the 50s, 60s, 70s, and into the early 80s to find environments like that. Now, look, nothing's perfect, right? Look, I look back and I see the 1970 recession and bear market, which was, it was a typical bear market, I suppose. But it's interesting. The market bottomed when inflation peaked, and it bottomed about 6 months before the end of the recession too. In 73, 74, which in some ways is more similar because the inflation rate went up very rapidly. You went from 3 to 12 in like 2 years, and so we've had a similar trajectory here. But there's big differences too. In the 73, 74 period, we had a very weak dollar. We had just come off Bretton Woods and delinked the dollar from gold. And now we have a very strong dollar. So, it's a different environment, but it's somewhat similar. And I think the thing that was striking about all those bear markets and recessions, starting with 1956 was the first one I looked at. So 56, 60, 69, 70, and then 73, 74, and then 80, and then 80, 81, really. All of those, the stock market bottomed when inflation peaked. It wasn't as much about interest rates. It wasn't so much about the Fed even. It was about inflation. And I think that's where we are now. So that makes it very interesting. Those June lows very interesting because that is right now, that's when inflation peaked on a year-over-year basis. So we'll see if that holds. Maybe it's not going to be the peak. Maybe it's going to go higher. Maybe it's going to be persistent. I don't have answers to those questions. I would say that in a strong dollar environment, which there is no doubt that we're in a strong dollar environment, I would not expect inflation to be all that persistent. Strong dollar is generally a disinflationary scenario. So we'll see how this plays out. But I think we probably have seen the highs on the inflation rate for this cycle. But, again, there's no way to know the future. We'll have to wait and see how it plays out.
I know you're watching money market futures, and those are indicating that rates will peak first to second quarter of next year. And you think that that's about as early as we might get a recession. But in your research, generally, what happens before the onset of recession?
Well, it is interesting. Look, before the onset of recession, stocks peak and start to fall. And when you take a look at that, the problem is that there are a lot of different. There's a variable lag there. You don't know how long it's going to be. From the peak of the stock market to the onset of recession can be anywhere from 16 months to a month. You don't know how long it's going to be. So we know that we peaked in January of this year. We're 8.5 months from the peak of the S&P 500. And by the way, the peaks in some of the other indexes were earlier. The NASDAQ peaked in, I think, October or November, I think it was, so of the previous year. So we've been, in this bear market for a while, and we're not in recession yet. I mean, look, there's any number of people who are going to tell you we're in recession, but I'm sorry, I've been doing this for 40 years. I know what the stats look like. I know what it looks like in recession, and we're not there. I think if you're making that argument, you're making a political argument, and I don't think it's worthy of really talking about. Look, you got to take the numbers as they are. We're not in recession now. We have not had a recession since 1950, where the recession started and rates weren't near their peak. Now, could we be near the peak right now? Yeah, we could. But right now, what the market says, what the futures market says, is that rates are going to peak in somewhere between March and June. So somewhere between the end of the first quarter and the second quarter next year. That's when rates are going to peak. That's what the futures market says. Now, look, it's a moving number. If we get worse data between now and then, they may bring that number forward. Look, if you go back 6-7 months ago, that date was way out in the fall of 2023. It's come all the way back to the spring. So it is a moving target. But right now, recession looks like a spring or summer event, 2023. So the market already peaked. The question is, though, we don't know how deep or how shallow any recession might be. So we don't know. Maybe the stock market's already discounted enough. I don't know that. And I don't think anybody does. So, it's hard to say. But I would say that if the recession starts in March, which I think is probably the earliest you can see it really start, then you wouldn't expect stocks to make a bottom now. I'm not sure, if stocks really, if that June low really was the low, that would kind of imply that we're not close to recession at all, that maybe even the March number is not right. I don't know. I would just say that if that March number is right, and that's when rates peak and we start a recession, because by the way, it's also another thing that should be pointed out. A peak in short-term rates is not always associated with a recession. That's not the way it works. It's sometimes it is, sometimes it isn't. If it is the beginning of recession, though, you got to figure that this bear market's got a long way to go, because you're going to be somewhere in the middle of that recession before stocks bottom. So if we're really going to have recession, in 2023, which I said in the piece, look, that's the consensus. Go and listen to CNBC for a half an hour. Go listen to Bloomberg for a half an hour. Just turn it on. You'll hear every person that comes on there is going to say, we see recession next year. Everybody says that. Okay, so the way I look at it is the market rarely does what everybody thinks it's going to do. The economy rarely does what everybody thinks it's going to do. So if that's going to be wrong, how is it going to be wrong? Is it going to be wrong because we get recession sooner? Maybe peak rates are going to peak in November. I don't know. Or maybe, we're not going to have recession next year. What if recession's 2024? I don't know. All I know is that we're in a bear market right now. Inflation has peaked. And if those 60s and 70s and 80s analogs are anywhere close to accurate, we've probably seen the lows on stocks. We'll have to see how this plays out, Bob. I keep telling people it's not my job, and it's not our job as investors to predict the future. We just have to interpret the present as best we can. Sometimes that's easy, sometimes it's hard. I think it's really, really hard right now.